All right, pre-market management. We got a mark down on Google, 623.39. If you go to the brain, we established what a quarter delta was, and that's just a starting point of that support level in the price action. So it's very coherently to be addressed that at that particular line, there will be a relationship between the actual buyer and the actual seller. We can see that they're marking this ask at 21.75. What are they doing? They're marking this down to that level at 621.01, and they could drop right down below the market very quickly to 615.86 is a bid. 16.75 is another lower entry intraday. Does it have to come on the opening bell? No one said that, but sometimes there's those long shooting price wicks down to those price levels. If your limit order is placed ahead of it, you get hit. You got nothing to lose and all to gain. And you start 100 shares there and 100 shares there. Then on the upper end of the market, depending on where the delta range is, we're at about a quarter delta, 621.30 by 621.75. That was my pre-market announcement when we started this whole thing. We're 14 minutes to the opening bell, and we're going to put some bids out here on that 620 call. We're going to mark that lower end to market. We're going to start at that 380 bid. We're going to start here at that 380 bid. Last print is 690. That's that lower end of that market should they disappear from this bid down there. And this bid would disappear down to that entry. 3.8 is where we're starting. That's one area. We got another market that we're going to bid it right here now at 4.60 on another entry. We got a higher entry above the market at a 520 level. And we have a 540 level entry even so. But the thing about it is, within those entry price action ranges, the upper range entries must have that very tight stop market order so that when you get to the lower end of the price action entry range, that you have the ability to deploy the higher volume entry, and then therefore your profitable debits are extremely much higher because of that wholesale entry. And we always have to take that in accountability within that bid and that ask and that close. Let us not forget, I can pull up the time and sales and we'll be happy to do so. There were prints as high as 627 this morning. This is an 858 print at 624.10, and people were buying these prints. They were buying from 627, and they've been dropping that bid and taking out that person. So when people were buying earlier in pre-market futures, and how do I trade pre-market futures? That's another new release that we are going to be taking down. That side of the futures market is they're sliding that bid, so that's how these bids lower. But you're at that quarter delta entry. There's that 621.70 to the penny, 621.75 on that asking what? Sell. Ask is the sell. Bid is the buy. Trade management stealing these entries. What did I say about the 540 and the 520 bids? That those entries will not be rode down to the other lower entries. No, I never said that. You will have that stop market order accountability within the transaction model, or you will not make that entry transaction. And what will you do? You will have to go into a paper trading status and do that. And we can do that. Last print, 621.50. Now, as we get closer to the opening bell, right now it's 6:19 a.m. Pacific Standard Time, 12/8/2011. We're going to readdress that bid and that ask at that quarter delta range. But when we get closer to 3 minutes to that opening bell, when that emotional excitement will take place with the public buyer and seller, you are going to make a market. Care about, okay? Here we are live. The bid and ask, there was some prints. We have the complete time and sales data that will go with this particular opening bell. Trade management on 12/8/2011. Bell opens in 2 minutes. They still have marked it down. If they slide that bid, as I said in pre-market video 1 on 12/8/2011, this is number 2, and where this bid and ask is now, going within 1 minute of the opening bell, so that the MMT can also understand that trading the futures of an equity, if they're dropping those futures, the price go down. They're not winding that market up, and you're still continuing to drop into that lower bid. But then the bid rises right away, going into this opening bell right close to that first teeny line. Now, if you want to accumulate an opening bell, this can be accomplished in the following manner. You can always take the lower bid and buy within a 3 teeny structure and have a little bit more weighting, so you could get 50 shares a little bit up here and 50 shares another teeny down, and maybe at the bottom you're going to get hit. And here we are, opening bell, coming up on this opening bell right now. Here's that option. Look at that bid now. That's that 620 call. It's coming out right now in that first manipulative, and this is all live on that print. The print is where it's at. Wholesale entry is how you make that market with the public, and how do you take advantage of that lower dollar print and let that market print come in. Volume is 2. Look at here, you hit 620.58. Where was that in your delta range? And this is that opening bell. It's here, it's live. You can see that 630 call getting marked down. They're not taking a lot of premium. As I told one of our MMTs yesterday, when you have lower price volatility, they don't, they're not nearly as erratic, because you can see 1 contract on that opening bell, 7 contracts printed. Here's that 630, 12, 7. Oh, here's one that I like. Go ahead and give me a bid, Rick Gully, on a 630, 12, 17. That expires next week, but it's $5 bid by 540. Go ahead and give me a bid at 460 on one and make me a market, just because there's only 12 contracts traded here. So I'll tell you what, jump in there at 530 if that is the true bid and ask. You can track the market and see. Now it's 530 by 550. Do you see it? Okay. And that's a 1217, isn't it? All right. Here's that Google print. There it is. It made that low, and it's holding it, and that's at 622.25. Look in your opening bell. Look in your Delta platform, the MMT platform, and look at that low, and look at where the bid and the ask is right now on that opening bell. Look at where that low was right over here on that 620. We made one market on the opening bell. They marked it down $1 wholesale so far, and that's that $5 low. And I also said that it could be bought in these ranges at 520 and 540, but then look at the bid and the ask, 530 by 560, 530, now you got a bid at 520 by 590. That's that opening print there. That's sliding that bid. Look at that last print on that opening bell. Here are the prints. They're sliding down. Let me show you here now. Let me show you here. When you slide that bid print, that's selling down that bid, you made that low. And you've got a bid and an ask over here. So, Brian Plain, let's go on this one over here. We got that low. Oh, all right. Hey, listen, people. On this 620, we got a 370 bid, right? They're 480 by 550. On the 620 call, verify your order entry with me now. Here we go, folks. We got Rick Goley. He just got hit on that low of the day. Now that bid and ask is 610 by 640. That's a 610, 640 with the last print of 590. That's that low print. That's what an MMT can do here live. Now he's got to figure out if the equity is going to go higher as it's in positive territory in the first 5-minute print of this opening bell on 12/8/2011. 12/8/2011, 5-minute print, walk that lower bid. That means that everything in that application is just burning and ascending, and he's asking me for a profit objective with a live entry in that 5-minute print. Put it out at 650 right now, and you will be hit. The high of the day, automatically you will have your dollar bid. But if this is going to keep going, there you go. Profit's been taken in that 6-minute opening bell print here and now live on 12/28 with Rick Goley. And Rick Goley will have his rating on this entry and this exit live on our MMT performing list as getting that low bid on the low of the day and then making that market and taking that transaction. Doesn't matter if it wants to go up any higher or not. This thing is just breaking out, but he was trading a option. And he got out right up here in that high of that print on a 6-minute opening bell live with Rick Goley. We're going to conclude that 7-minute opening bell with making a market and getting hit on that low print. On that low print, yes, they did close at 6.50 ratio. The MMT live entry, market maker entry, because it's live, so we know it's truthful. Because Rick Goley will testify before the other MMTs on how he did place those orders. Now it's a question of getting another bid. And we have the whole trading day ahead of us, but it's all about how to steal that opening print and make a market with the public and then sell it to them. And then get back in again as the equity makes its intraday peaks and its highs and its lows and its price action. We've been open 8 minutes on this opening bell print with the very well documented entry live here and now. Here we are right now. We're making a market, that 630 bid. They walked up that bid when we had a reversal in the equity. I will be bringing up that chart. I need to know where the IR readings are. I need to know where the current ratio is, and I need it pegged in order to be able to have a limit order out here now live so you don't end up losing it if the thing rips around. All right, so you got to go below 55. Yep, the IR's got to fall below 55. Well, if it's not, Mr. Plain, just wait for it within the bid and ask as the markets are selling down here. And this is a live example of people needing to learn that IR and which way it's going and working out the exit. So guess what he can do? Because of the way that it's going, you're selling off a little bit here. You're exactly 13 minutes on the open. You have a high reversal. Because you do. And now, as long as this bid will drop like it is, and they print through those bids as they are, then you'll be able to get someone to buy your market price on that opening bell print where you got in here. And that, so go out at 770 now and work that downside bid of 55 pennies. That's when they're going to want to buy your transaction. When this side prints, then this side will want to pay you your profit, sir. And that's what you deserve as long as that lower print. See how he printed up there? See how he printed 56, 51s there? And we have a successful bid and ask on the put side of the market on this opening bell in the first 12-minute transaction, taking that dollar live entry spread, and now that's how it's done between that 630 and that 1030 high. That's that 630 put. When they mark that equity up off of that opening bell to 626, what they did is they marked it down to that low, which popped that to 1030. Then guess what they did after that? They walked that price print straight up to 626 and took that right down to the 630 handle. That's $4 below the market, and that's where we started making our market here now live at 6:44 a.m. 12/8/2011 with that live entry, taking that live dollar bid and ask spread and turning that into a profit, but rejoicing in those transactions time and time again.